A presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have 4 guests this week. I believe tomorrow we're going to be able to have Kevin Murphy talking about the work of Bill Ehrman in Ehrmanometry. On Wednesday, we should have, for sure, we're going to have Bill Meridian from Cycles Research out of Vienna, Austria. Thursday, we're going to have Norm Winsky. He's asked to come on to talk about something very special. And as you know, he was yelling and screaming about the short side on Thursday and Friday. So I don't know if it was about the NASDAQ, but that did have a little bit of a move down. And then, of course, on Friday, we will have Stan Harley from the Harley Stock Market Cycles, who's done a great job, pinpointing some of these things. And he's looking at a major low coming in towards the end of this week, he told me, just off the cuff. So we'll have more information on him by Friday. We'll certainly have an idea where we are with that. But let's get started like we usually do. We'll look at the NASDAQ, the DAX. And as you can see on the 15-minute chart, we were in a slight downtrend. On the daily chart, we were making a ABC structure, and that tells us that we're most probably getting ready to have some type of a correction in the DAX index, at least from a short-term perspective. Now, the one thing that I think that is really important is what happened in the NASDAQ on Friday. Technically, we have to really look at this very, very closely, and the reason for that is it's very unusual to see something like that happen, and you want to see what it did technically so that you're not too surprised with what happens next. If you'll take a look at this closely from the 2nd of June to the 9th of June, which was Friday, the market really never went anywhere. High was between 58.90 and 59.05, a 15-point swing there. And if you'll notice, between the 7th and the 9th, those last 2 days of trading, you made a perfect ABCD structure, which made that a 3-drive to a top pattern. And the last leg, of course, was right at 1.27, and then you broke, and you broke very hard. We've seen, we'll show you the larger picture on this, but you'll notice that the market stopped exactly at the 1.618 retracement of the low that we made in June back at 57.70. That's very important, folks, because if we go back below that, which would be 56.70, that would tell us that we're probably going to go a great deal lower. But this is I believe it's a warning sign of some kind that this is something that you don't see very often. It's an aberration. Not many people. They talked about a 4% drop, but it's been up so much nobody paid any attention to it. This is what happened when we were looking at the markets back in 2000. We had the same thing where the dot-coms went crazy and topped on March 24th of that year, where the Dow had already topped into into January. But that's not what happened this time. This time, the Dow Jones went even higher. The Dow was up on the day. I mean, to me, if you'd have told me the NASDAQ was down 150 and the Dow was up, I'd say, find the medication you're on, because I'd like to get some of it. Because I'll tell you, I would have been really shocked. And yet that's exactly what happened. So you have to, really play close attention to it. Now, if we look at the big composite, we want to take I don't know if Xanax works or not. I'm sure it does. I've never taken any of it. But let's take a quick look here at the big composite. This is all the issues on the NASDAQ. And you'll notice that we also came down and we hit that 61% retracement. That's equivalent to what we were looking at when we were watching the NASDAQ 100, when we were setting right at the 1.618 expansion from June 1st. So there were two major numbers coming in there at that part. And that's why it's so very important that if we go below 56.70, that's going to be very, we're going down big time. It doesn't make any difference whether it's a Dow, whatever. We break those numbers from Friday, we're most probably going down. High degree of confidence on that one if we get that. And part of it was because, we did have that full moon, which was a super full moon when we had perigee, when the moon is closest to the Earth. We also had that Hindenburg omen, if you remember how the market was not showing good strength as far as advanced declines and new highs to new lows. So maybe it all fit together. I'm not sure, but we want to keep a close eye on it because this market has a tendency that once it starts in one direction, it can go a great deal to the downside or upside without any trouble at all. So I think it's important to pay attention to that. One thing I do wanted to cover here this morning was some of these stocks that are in the news all the time, and just to show you what they've done on a long-term basis. Let's take a look at the car that doesn't make any noise, Tesla. And you'll notice here, if you look at the ABCD structure, we had two major patterns up there at that 370 level, and the market sold off from that level. Whether that means anything or not, I don't know, but those are beautiful ABCD patterns. They're both as symmetrical as you can possibly get. Each of the corrections were nearly equal, so there's a great deal of harmony and symmetry here in Tesla, and telling you that there's a high probability that this could be, if not already, a major top in that market. Now, if we take the next one, which is Facebook, we're only going to go back to April because I wanted to highlight the retracement that we hit in Facebook on Friday. And here again, you're going to see the market stopped at the 78% retracement of the May 15th low. Folks, it went from 155, it went to 155 to 147. That's only 8 points. So this is not much of a move at all. I mean, it looks like a lot on the chart, but in fact, it is not that much. So it could very easily reverse and go back to the upside. So the key to watch are those lows that we made on Friday, and to also watch what the rally is going to be, if in fact we are going to rally this morning, and that'll be the thing that will take it to the promised land if that is the case. Now the next one we want to look at is Google. That's one of the two stocks that I use all the time are Google, and of course the Amazon. And both of those are just incredible stocks. I still don't understand how Amazon makes any money. I mean, they dominate everything. But by gosh, you order something, and they have it to you in 2 days. You don't have to go anywhere. And if you don't like it, you just put it back in the mail. I mean, I've never seen anything so easy. I mean, it's a great idea, and I'm glad I was able to tell Jeff Bezos about it many years ago when we were having coffee. And if you believe that, I still have 2 shares of the Brooklyn Bridge. Hold on here. Let's put up this next one of the big Apple, and we'll see what it's doing. Here again, Apple another one went from 155 down to 146, bounced $7 or $8, which is a pretty big one. But the one that was really interesting was Amazon because it bounced a lot. Let's just take a quick look at this one. And the only reason I look at these is I want to just see, where the mindset is some of these things. But if you'll notice here on Amazon, it broke below the May 1st lows, but it recovered nicely. It recovered better than $50 a share. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we want to take a look at Netflix. If you'll notice here, from June through November, we have that ABCD pattern that topped up in that area where it looks like it could have been a top for Netflix, but this thing's got a lot of gaps in it, but that's neither here nor there. A lot of these have gaps in it. But anyway, that's the other one that we want to watch. And then we've got, I think we have one more: Facebook, Tesla, Google, Apple. That's all of them. We did them all. So anyway, those are the ones that I watched very, very closely as what's going on. But I think it's important to keep in mind that some of these big tech stocks have made some pretty significant tops. Someone's asked me the question back in the days of the dot-com bubble, were there patterns there? Of course there were patterns. They were all expansion patterns. They were always expanding to either 1.618 or 2.618 or even 3.14, and they were going vertical. I mean, it was just one of those Isaac Newton trades where it's never going to go down, but when it finally topped, the NASDAQ dropped 87% from March of 2004 into 2002. So I don't think anything like that's going to happen now. It could, but who knows what's going on. Let's take a quick look about one market that is hanging on by a thread. And boys and girls, when I mean thread, I mean thread. And that is the gold market. We have to take a look at it this morning to where we are. If you'll look at it, if the low holds here at 1265, which I do not think it's going to hold, and that's my opinion, of course, but that's $34 down from the top. So far, that's been the low today. We took out the low of Friday by just 80 cents. So this is about as low as risk you're ever going to get to buy gold, because if it gets below that 1263 level, I would think that we're most probably going to go to the downside. If you get the newsletter, which I hope you do, I have a really good description there of the long-term weeklies, dailies on gold, silver, and platinum, and make a case for the fact that they could go a whole lot lower if they don't hold these support levels that we were looking at. In fact, silver and platinum look so bearish that you just can't see any reason to buy them at all. But gold, you do have that one reason, and that's where we are right now. And whether that's going to hold or not, remains to be seen, but it's a very important spot to look at. Remember, gold has been in a downtrend since the 1932 per ounce level, and that's, that was a long time ago. That was 4 years, well, it was more than that. It was 5 years ago. So we'll see, it was 6 years ago. That was April of 2011. So we've been in a bear market in this for quite some time, but we've had some higher bottoms now over the past year since December of 2015. So there is a chance here for gold, but believe me, it's living on borrowed time. So keep an eye on, watch this gold, because we get below that 1263 level, I would assume this is breaking, and that's going to tell us that we're going to go down, a great deal lower. If you look at, if you look at silver and compare it to gold, you can see the difference here. Very easily. Hold on one second and let me get this up here so you can see silver and gold together, and you can see how gold broke out. Basically when it broke out, if you'll notice, that was nothing more than a 3-drive pattern. If you looked at it, look at the gold line there, you'll see that was a 3-drive pattern, and the silver could only make a 61% retracement, which is, not very strong. Not very strong is the understatement of the year, and now it's breaking quite a bit. It's been leading the market down all night. It's been, as gold tried to rally a couple of times and get up to that 1271 level, silver kept down ticking. So it's telling you that the bias appears to be to the downside here. And I would not be surprised to see gold break the 1260 level, later on this morning, because, it's just one of those things that once it starts down, it doesn't have any friends. And we saw the same thing in the XAU. If you take a look at the XAU here, you'll see the same thing. The XAU was certainly telling us that this was certainly a suspect breakout in the gold market, and that is in fact what it's done. If you look at the XAU from February through April through June, you'll see that you have those 3 lower highs. And, that's basically a 135 pattern, folks, and that's another, bearish pattern that is there. So it looks bearish to me in the metals, so whether that's going to continue on or not, we'll have to, do one thing at a time to see if it's going to go to this level. Now, we have another market that's hanging on by a thread, but a much bigger thread, and that is, it's more like a lifeline rope on this one. This is the crude oil market. Let's get this one up to look at, because I don't think I'll have time to do, well, maybe I will. We'll do the whole complex if we can. You'll notice here that we made a 78% retracement. We stayed there for several days. We made a tweezer bottom. We've now rallied up above the $46 per barrel level. We got up to around $46.50, I believe. But again, any move down below these levels that we made on Friday is going to signal, something to the downside. Now, if you notice here, when I'm going through some of these commodities, that they're all bearish. Now, is that going to have an effect on what's happening in our economy? That I don't know. That's a couple levels beyond my pay grade, but that's usually not a good thing, because commodities go up with inflation and people have to buy commodities in order to make the product. So pay attention, because if we run into some real heavy deflation here, I think it's going to be hard for some of these stocks that are so high priced to stay up in these levels. So that's another thing to keep in mind. That's more of a fundamental thing that's really hard to figure out. But if you look at the charts and watch what the commodities are doing, they might give you an indication that what the overall economy is doing. So just watch that very, very closely. Someone's asked a question about the elections that they had in England and also the ones in France. Folks, you could ask me just about any question and I'd have a better idea of what's going on than I do in politics. So I have no idea. All I know is the fellow in France was a former Goldman Sachs a trader, I believe, And, he's basically got the whole run now. He's got about 80% of the parliament over there, so he can do pretty much what he wants. And, they'll probably go down to a 12-hour work week with the 6 months vacations. Well, we'll see. All right, let's move on to something that's really important and one that I think has got a really good chance. They not really, but let's take a look here. You can see here what we have going here in the VIX here for just a little bit, because we had a big spike. Well, a mini spike is what you call it. A mini spike Friday with the move we had in the NASDAQ. But, it was really an emotional spike because of the fact that the Dow Jones was still up, the S&P was still up, the New York Stock Exchange Index was still up. So all of those were still in uptrend. So that was really not much action in the VIX. I would expect action in the VIX if we get below those lows in the NASDAQ. That would tell us that we're looking at something really, very, very important. So watch that closely, because if we get below that level, we'll be looking at. Right now, we've been able to hold up. We've had a 50% pullback this morning in the S&P 500, and we've been as high as 24.30 last night, and we're trading around 24.24 right now. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to shift gears here a little bit and get into some of the stuff that Mark Douglas worked with me many years ago when he moved here to Tucson. That's where he wrote the book, Trading in the Zone. And he moved here on August the 16th of 1997. I remember that day because we were having a tremendous lightning storm, and the lightning hit a big tree in front of my house, and the tree acted like a spear and went right into the back side of the house and put in about 5 inches of water and did about $25,000 worth of damage that day. So it was easy to remember that day, in addition that it was Elvis's birthday. But one of the things that Mark always talked about was how you handle losses. And one of the things when you're trading, you can't be afraid of being wrong, folks. Remember, losers wonder, what am I going to do when I win? How am I going to spend the money? You know, will they put my picture in the paper, whatever? But winners ask, what will I do when I lose? But you must always focus on your losses, because winners focus on how much money I can lose, and losers focus on how much money they can win. That's why when you look at the risk-reward equation, the only thing you can control is the amount of money you're risking. You can't control if you're going to win or lose. We don't know that. And you don't know how much money the market's going to give you. So the only thing you can do is to control that premise of what are you going to do when you lose. That's the whole key to look about it. But you never know you're right till after it's all over. You have to remember that. And another thing that you must remember, I'm reading this from my notes that setting here from many years ago, but methodology of the trading will never tell you what is going to happen next. It'll give you a probability of what is going to happen next, but it's never going to tell you with 100% certainty that this is what's going to happen next. You must always think in terms of probabilities, and that's the whole key, to trying to be successful in this market, is to learn how to trade in probabilities, and you'll be far better off than if you try to come in and think that your system is perfect or it's going to, beat the market all the time, because it's not going to be that. It's a string of trades that you're dealing with, and that's the whole thing. Because if you take care of your losses, your profits will take care of themselves. And that's the words of Roy Longstreet, and it's also the words of Amos Hofstadter, two of the greatest traders that I ever met. Anyway, hold on one second here. There are several stages of successful trading, folks. The first thing you want to do is you have to get rid of the fear of being right or wrong. You just have to be able to do that, and you can practice doing that. Well, we're almost ready to take out those lows here in the NASDAQ from Friday. Let's see how that acts. Anyway, I happen to be looking over my shoulder at the Bloomberg. Anyway, there are several stages of being a successful trader. One is perception. That's where you have to decide what type of methodology you're going to use, and you perceive that you're able to win just based on your methodology. And part of that is you must learn to think in probabilities, and recognizing that the market is greater than anything we can ever think about or do at any time is really important to do that, because if you don't respect the market, you're looking at something really seriously flawed in your trading, because the market is seldom wrong, but men are often wrong. Those were the words of Roy Longstreet. So in order to think in probabilities, the trader has to learn success comes from a string of trades. It doesn't come from any one trade. One trade might make you look like a hero, like if you sold Brexit at 150, but how about the trades between Brexit 150 and where it is now? I mean, there's a lot of trading that goes on, and so it's not one trade, it's a string of trades, and there's a probability of those trades that make you either a better or worse trader than you would like to be. So remember that that's really important, that you perceive that you're your methodology is at wreck. Now, the second thing, stages of the 4 stages, is execution, and then the third stage is accumulation, and the fourth one, of course, is distribution, where you actually give yourself some money. But let's take a little look at the execution. Is learning how to execute trades immediately when they occur. This is a stage where you cannot think ahead of time. In other words, you must think ahead of time of what you're going to do when those set of sequences arise that gives you the actual trade of being wrong. The problem arises is that when you've had some losses in the past, what happens? You have the 4 fears coming in. The fear of being wrong, the fear of losing money, the fear of missing out, and the fear of leaving money on the table. These are common things that we go through, all the time. That's really the same thing. So keep in mind that those are the ones that are very, very important. So that's what we're watching here. Now, the last one is how you accumulate money over time. Is you have to have a belief in your own consistency, and you have to have a self-evaluation that supports yourself giving more money to yourself as a trader. And you have to believe in being a trader is basically you're an insurance man, and you're taking the other side of the trade is what you're doing. So keep that in mind when you're trading, is that you're actually in a business where you're a risk arbitrator, because if you're short something, you're taking the risk for somebody that is on the long side. So that's really what you're watching. So keep in mind that all of these things add together of what you're going to be. It's really the main thing. One of the reasons why it's so hard to be a trader, because you have these lapses in constant trading, and this leads to trading errors that fall into the area of what you might call stupid mistakes or doofus type trades, but who knows. But that happens to all of us at one time, but you got to be able to correct it. Usually the difference between the neophyte trader and the trader that has a lot of experience is the trader with lots of experiences recognizes it right away and does something about it. The neophyte trader doesn't do that. What he does is he hopes and prays that the market will go back into his profit zone so he's able to make a legitimate decision. Because when you're watching the monitor all the time, which is the absolute one of the worst things you can do after putting on a trade, what you want to do is you want to stay away from that, because if you're long, you focus on the upticks, and if you're short, you focus on the downticks. And why is that? Because our bodies are accustomed to stay away from pain. And if you're long and the market is going down, that's pain. If you're short and the market's going up, that's pain. So don't look at those, and you'll be far better off than if you try to realize that you follow every tick, that you're actually making money. It's even worse for us now in the last 20 years or so, because we have all these platforms that tell us exactly where we are. Within a millisecond, you can see where you are within pennies, well, to the exact penny, and you can see the money going up and money going down. That reminds me of one of the only trade that I've ever heard that is 100% accurate, and that is the trade that Larry Williams gave me, 40 years ago. When I asked him, I said, is there anything that's 100%? And he said, yes, there is. And he said, what's that? And he said, it's a telephone trade. And I says, what do you mean? He says, well, if you go to your calculator and calculate how much money you're making. This was before we had to do it by hand. Before you do that, go to the telephone, pick up, before you go to the calculator, go to the telephone and get out of the trade, because your greed mechanism just hit maximum velocity and you're right at your maximum profit. And believe me, I've looked at that over the years, and that one is pretty close to 100%. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it.
Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we have now taken out the lows in the NASDAQ from Friday. Whether we're going to continue to, see further downward movement, we'll have to wait and see, but we did do that. And it appears that, if we keep breaking, in other words, if we don't reverse here pretty quickly, we could start one of those days. We're down more than 60 points in the NASDAQ already. And remember, Friday, we were down 140. We're only down, 7 or 8 in the S&P, but the overall tone of the market right now is a tad to the bearish side. So kind of watch that if you have long positions on. I posted a chart today from Stan Harley, and Stan's going to be our guest on Friday. And, of course, we have this really nice cycle low that he's looking at here. So far, it's pulling down into that low that he thinks is coming here, which would be on Wednesday or Thursday. So it's a big day on Thursday because we have Norm Winsky on. He has something to tell us about the astroharmonics that are going to be coming on that date. And he's been pretty accurate in the past, so we'll watch that. But as you'll notice here, the price levels that Stan is looking at is around the 2,300 level. That's in the S&P. We're trading around 2,420 right now. So if the NASDAQ can drop 200 points, I think that the S&P could easily drop 100. So because it's at a different price level. Now the gold, someone's asked the gold. We made a lower low in the gold by 50 cents from Friday, and that was right at the exact number. We've already rallied just a few bucks since we've been on the air here. But again, that doesn't really mean very much. The thing that means something is if it can hold this 1265 level that we hit this morning, then you've got a chance where gold could, have a rally. Now, how much of a rally, I'm not sure. If the silver chart looked like the gold chart, I would have been buying gold with both hands, but it doesn't. And the platinum chart looks even worse than the silver chart. So those are the ones that I don't want to get involved with until I can get a further indication, because long term on that gold and silver, they look pretty bearish, folks. And I've been bullish on that for quite a while. But you remember when we were making those highs last week, I was very skeptical because of the divergence we were seeing in the silver, the gold silver index, and then also in platinum, and the fact that that was an ABCD structure and a 3-drive pattern in the gold at that time. So I didn't think that would be a valid breakout, but that's neither here nor there. We'll watch that. Tomorrow we're going to spend a little extra time in the morning talking about the grain markets because we've got some hot weather coming in. The weather is not affecting the market so far today. We had a little bit of a negative report on Friday, mildly negative, and we're down a bit in wheat and corn and beans today, but I think that's just another buying opportunity, to keep an eye on. So those are the main things that I think that are relatively important. So keep an eye on some of these because you don't want to get caught in a big downdraft that we have. But right now it's nothing big. I mean, the NASDAQ's down 60, but, the S&P's virtually down nothing. Down a few. The Dow's down, pretty much nothing. So there's no fear in the market at all. That doesn't mean it can't come, but right now there's not any fear happening in the market. So pay close attention to that. Now, the one other thing that I did want to mention is from our good friend up in Seattle at Seattle Technical Advisors. That's Ed Carlson. He's got some things from the George Lindsay's, the guy who wrote Three Peaks in the Domed House. He was a very astute market technician going back in the 50s, 60s, 70s, and 80s. He actually passed away on August the 25th of 1987 at the exact top of the market. It wasn't a heart attack. He died peacefully in his sleep, but he did die on that day, and he was in his 80s at that time. But what he's showing you here is some of the cycles that they look at that are related to some of these swings up and down. These are long-term cycles, of course, but the fact that they're coming due right around this time in early June is relatively important. And we've talked about this with our good friend Kevin Murphy from Thermonometry fame, and then also from Bill Meridian, and also from Norm Winsky. So there's a lot of things, saying, about June. Now, there was the old adage, sell in May and go away. If you sold in May, you missed a good thing because May went straight up. And so some of these market adages are just that. They're nothing more than adages, and they don't mean a whole lot. So watch it, folks, because there's something big happening out here. When you see the NASDAQ move that much, that quickly, something big is out there because that people were a little scared. I don't know what it was, but there was something there that everybody got scared. So when everybody gets scared, maybe there's something there. Maybe the guy that pulled the whistle, that there's a fire in the firehouse, it really means something. So pay a little bit of attention to that to see what's going on. And the other thing to watch here, really important, is if we do rally, we want to see what the quality of this rally is going to give us if we rally here the next few days, because that's going to be, something that is going to be equally important. Because if it's like a dead cat bounce, look out. We could easily get to that 2,300 level in the S&P, without too much. And that's not very much. That's a $6,000 move. I mean, gold moves that much. Crude oil moves that, intraday over a week. So, the volatility that we're having in the stock market is nothing like what we get in gold and crude oil and treasury bonds. Even treasury bonds move, greater volatility than we get in these stock index futures, with the exception of what happened on Friday. That was an outlier event, and whether it's going to continue on down or not, let me look over my shoulder here, and we'll see how it's doing so far this morning. Well, we still made new lows. We're still trading below the lows of Friday, so nothing really dramatic is happening at that point. But that tells us that we broke the 1.618 level, and that's not a good thing if you're long, because that that's very crazy. What you don't want to happen is, if you're long, you don't want to see this simulated selling coming in with the S&P and then also with the Dow Jones. Then you're going to be talking about something tremendously tough to pay attention to. Now, one of the things when I'm watching markets like this, I like to see, I take an hourly chart and I measure to see, how close these things come to the expansions of 1.618. And we are setting right at a 1.618 expansion of the overnight lows that we had since Sunday in the NASDAQ. That's right around this, on the mini NASDAQ, it's right around this 56.59 level. So somewhere in that 56.59 to 56.50 level will be a 1.618 expansion. If the market can hold that, then it's got a chance, for some type of a reversal. But until that happens, it doesn't look like it wants to go anywhere but down, at least early in the morning, and it's still very early in the morning, so let's keep an eye on it. All right, the next one we want to watch is get to the interest rates markets, because if we look across the pond here, just give me 1 second here, I wanted to show you a really beautiful chart in the German Bund, which trades very similar to our markets, and if you'll notice, you'll see here that we have a potential head and shoulders pattern here in the German Bund. We also have a beautiful Gartley pattern exactly at the 78% retracement. Right on Thursday, it hit spot on. And it had some really nice cycle work in there that see 20 to 22-day cycles up. So watch these current interest rates, because they should start to go higher as bonds and notes go lower. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to mention finally about the dollar index. We've been watching this for several weeks. If you'll notice on this weekly chart here of the U.S. dollar index, you have as perfect as symmetrical chart as you will ever find in technical analysis. If you'll notice the two triangles, how perfectly equal they are, you'll notice that the market came down and stopped exactly at the 61% retracement 3 weeks in a row. That's equivalent to that 112.90 level in the euro. The euro is trading around 112.04 this morning. So this is a very, very interesting chart, and it's telling us that the U.S. dollar should start to rally, i.e. the euro should start to move lower. And that's also true with the dollar yen and also with the pound and the Canadian and also the Australian dollar. But I covered those in the newsletter. But it's important. It's important for another reason, is if we break below that level now, that would be a really, really bad thing to happen. The NASDAQ has now broken down way below that 56, 59 level. There's, if you're going to pick a bottom here, folks, wear a life jacket, because you don't want to have happen to you what happened on Friday, because that was a big surprise on Friday. And possibly, maybe that was a prelude to what's going to happen today. Maybe it's going to be worse today than yesterday. Keep that in the back of your mind. You always want to have that fear going, because you have to protect yourself. Because if you don't put a stop in, you're telling the market, I know more than you do, and I'm not afraid of you. And boy, you better be afraid. Be afraid, be very afraid, because, that's the main thing. Finally, it's very sad to hear that Batman passed away over the weekend, Adam West. I didn't know him, but I knew Robin, Burt Ward. He was one of our customers at Drexel, super nice young man, and he's had the Batman logo going for him for all these years, and he's a really nice guy. Anyway, Adam West was a nice fellow. I never got to meet him, but I enjoyed the series very much, and it's still one of the famous things that people watch these days. So, okay, let's move on to what we're going to have tomorrow. Our guest is hopefully going to be Kevin Murphy, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.